What is one key difference between an insurance broker and an insurance agent in the New Zealand insurance market? A. Brokers can issue policies directly to clients. B. Brokers act on behalf of the insurer, while agents act on behalf of the client. C. Brokers are employed by underwriting agencies only. D. Brokers act on behalf of the client, while agents usually act on behalf of the insurer. The correct answer is D. Brokers act on behalf of the client, while agents usually act on behalf of the insurer. Explanation. Brokers represent the client's interests and provide access to a wide range of products. Agents typically work for one insurer and are limited to offering that company's products. What is the broker's fiduciary duty when dealing with clients? A. To act primarily in the insurer's interest. B. To always act in the best interests of the client, even ahead of their own. C. To maximize profits through premium loading. D. To focus only on selling the highest commission policy. The correct answer is B. To always act in the best interests of the client, even ahead of their own. Explanation. Fiduciary duty legally obligates brokers to prioritize the client's needs. They must avoid conflicts of interest and act with integrity and full disclosure. What is the first step in conducting a needs analysis for a new business client? A. Selecting policies from the preferred insurer. B. Recommending a product bundle. C. Understanding the client's operations, goals, and risk exposures. D. Evaluating financial statements. The correct answer is C. Understanding the client's operations, goals, and risk exposures. Explanation. Needs analysis starts with understanding what the client does, what risks they face, and what their objectives are, which helps shape appropriate recommendations. Which of the following best describes an insurable risk for a business client? A. Projected profit margins. B. Employee dissatisfaction. C. Political opinion. D. Property damage from a storm. The correct answer is D. Property damage from a storm. Explanation. Insurable risks must be accidental, measurable, and financially compensable. Property damage from natural disasters such as storms meets these criteria and is typically covered under commercial insurance policies. Which of the following is the broker's responsibility when comparing multiple insurance policies for client? A. Selecting the most expensive policy to insure coverage. B. Choosing only local insurers regardless of product suitability. C. Ignoring exclusions if premiums are competitive. D. Assessing and explaining key terms, exclusions, and coverage differences. The correct answer is D. Assessing and explaining key terms, exclusions, and coverage differences. Explanation. A broker must help the client compare policies not just on price but on terms and exclusions, ensuring clients understand what is and isn't covered is part of the broker's professional duty. Why is matching a client's identified risks to specific insurance products essential? A. It enables the broker to avoid providing advice. B. It ensures the client pays the lowest possible premium. C. It provides targeted coverage and minimizes coverage gaps. D. It reduces the number of insurers the broker must contact. The correct answer is C. It provides targeted coverage and minimizes coverage gaps. Explanation. By matching products to specific risks, brokers help avoid underinsurance and ensure the client is fully protected. This is key to professional risk management and quality advice. Which of the following would typically be included in a risk profile submitted to an underwriter? A. The broker's commission rate. B. Insurer complaints about the client. C. Copy of the broker's license. D. Client's risk management practices and claims history. The correct answer is D. Client's risk management practices and claims history. Explanation. Underwriters rely on information like the client's loss history and mitigation efforts to assess and price risk accurately. Brokers must provide this data in the submission. What is the broker's role in negotiating with insurers on behalf of the client? A. Present risks in the worst possible light to secure high coverage. B. Reduce coverage to the bare minimum to win the client's business. C. Seek the most favorable premium and coverage terms possible. D. Accept the first quote offered by the insurer. The correct answer is C. Seek the most favorable premium and coverage terms possible. Explanation. A broker should advocate for their client, negotiating competitive premiums and ensuring the coverage is suitable and adequate for the client's needs and exposures. Which type of insurance would most likely be recommended to a transport company to protect its fleet of trucks? A. Marine hull insurance. B. Professional indemnity insurance. C. Life insurance. D. Commercial motor insurance. The correct answer is D. Commercial motor insurance explanation. Commercial motor insurance covers business vehicles such as trucks, vans, and utes. It includes protection for property damage, theft, and third-party liability, ideal for transport companies. What is a key outcome of presenting a comprehensive risk submission to an underwriter? A. The insurer will bypass the normal underwriting process. B. The broker's fees will be automatically reduced. C. The client can avoid paying any excess on claims. D. The underwriter can accurately price and structure the coverage offered. The correct answer is D. The underwriter can accurately price and structure the coverage offered. Explanation. A detailed risk submission allows the underwriter to evaluate the client's profile properly, leading to more accurate pricing, appropriate conditions, and better policy terms. What is the main purpose of structuring a professional insurance broking proposal? A. To ensure the insurer can issue cover without delay. B. To provide the client with a clear understanding of product features and choices. C. To satisfy legal requirements of the Insurance Contracts Act. D. To allow the broker to recommend the most profitable policy. The correct answer is B. To provide the client with a clear understanding of product features and choices. Explanation. A professionally structured broking proposal allows clients to evaluate insurance options based on their needs. It should outline product features, benefits, limitations, and alternatives in a logical format to support informed decision-making. This is a critical part of the broker's duty of care. Why must conflicts of interest be disclosed in a broking proposal? A. To make the proposal more attractive. B. To comply with advertising standards. C. To allow the client to make a fully informed decision. D. To meet underwriting requirements. The correct answer is C. To allow the client to make a fully informed decision. Explanation. Disclosing actual or perceived conflicts ensures transparency and aligns with the duty to place the client's interests first. This is essential for maintaining professional integrity and complying with the Financial Markets Conduct Act 2013. When confirming cover has been placed, what should the broker provide to the client? A. A signed receipt of payment. B. A verbal confirmation followed by an email. C. A written confirmation including a certificate of insurance or policy schedule. D. The insurer's financial strength rating. The correct answer is C. A written confirmation including a certificate of insurance or policy schedule. Explanation. Once binding cover is confirmed, brokers must issue appropriate documentation such as a certificate of insurance, schedule, or policy wording. These documents are critical proof of cover and are often required for compliance, contracts, or legal use. What is the primary risk of failing to ensure accuracy in issued policy documentation? A. It may lead to processing delays. B. It could cause client confusion about fees. C. It may invalidate the client's cover at the time of claim. D. It reflects poorly on the insurer. The correct answer is C. It may invalidate the client's cover at the time of claim. Explanation. Errors or omissions in policy documents can lead to denial of claims, disputes, or legal liability for the broker. Ensuring accuracy, completeness, and legal sufficiency is part of the broker's professional duty under New Zealand broking standards. How often should a broker review a client's insurance needs? A. Once every 5 years. B. Only if the client requests review. C. At renewal or when circumstances change. D. Monthly, regardless of changes. The correct answer is C. At renewal or when circumstances change. Explanation. A client's risk profile can change due to new assets, legal obligations, or business operations. Brokers must proactively review coverage at renewal and stay alert to any changes that might impact insurance needs, ensuring the policy remains appropriate. What is the broker's role during a client's insurance renewal process? A. Review current coverage, reassess needs and present renewal options. B. Let the insurer handle all renewal matters directly. C. Ask the client to call the insurer themselves. D. Send policy quote with no changes each year. The correct answer is A. Review current coverage, reassess needs and present renewal options. Explanation. Brokers must ensure that a client's cover stays suitable and competitive. This means reviewing the current policy, checking for changes in risk, and discussing updated options, pricing, or alternatives prior to the renewal deadline. Which of the following is the most professional way to communicate a claim outcome to a client? A. Provide a written explanation with supporting documents and offer to discuss. B. Call and leave a voicemail with the decision. C. Ask the insurer to notify the client directly. D. Send a report with no commentary. The correct answer is A. Provide a written explanation with supporting documents and offer to discuss explanation. Professional claims handling involves clear and transparent communication. Brokers should provide not just the decision, but also an explanation and support to ensure the client fully understands and can ask follow-up questions if needed. What is the broker's duty when assisting with complex claim involving policy interpretation? A. Advocate for the client's interests and interpret policy terms on their behalf. B. Remain neutral between the client and insurer. C. Let the client deal with the insurer's legal department. D. Delay response until legal advice is sought. The correct answer is A. Advocate for the client's interests and interpret policy terms on their behalf. Explanation. Brokers have duty to act in the best interest of their client. This includes clarifying policy terms, explaining the implications of exclusions, and supporting the client's position in complex claims, especially where interpretation is unclear. What documentation is typically required to confirm placement of cover with an insurer? A. Cover note, certificate of insurance, an insurer's confirmation. B. Signed financial advice declaration. C. Copy of the insurer's privacy policy. D. Broker's invoice and statement of advice. The correct answer is A. Cover note, certificate of insurance, and insurer's confirmation explanation. These documents together serve as formal confirmation that insurance coverage is in place and include details such as effective dates, policy terms, and issuing insurer. They are often required for compliance or contractual obligations. What is a key broker responsibility in managing endorsements or policy changes? A. Immediately assess the impact of the change and update policy documentation. B. Only act when the insurer instructs. C. Recommend cancellation and start a new policy. D. Ask the client to make the change directly with the insurer. The correct answer is D. The underwriter can accurately price and structure the coverage offered. Explanation. A detailed risk submission allows the underwriter to evaluate the client's profile properly, leading to more accurate pricing, appropriate conditions, and better policy terms. Under the Financial Markets Conduct Act (FCA) and the Financial Services Legislation Amendment Act (FSLA), what is a core obligation of a licensed financial advisor? A. Disclose any relationships with offshore insurers only. B. Provide advice only through employer institutions. C. Act in the client's best interests when giving financial advice. D. Obtain client's signature before giving any advice. The correct answer is C. Act in the client's best interests when giving financial advice. Explanation. The FSEA and FSLA require financial advisors to give priority to the client's interests, ensure advice is suitable, and act with integrity and skill. This duty is central to maintaining professional conduct. According to the Code of Professional Conduct for Financial Advice Services, financial advisors must A. Avoid giving advice unless asked by the client. B. Only provide advice if they are commission-free. C. Exercise care, diligence, and skill at all times. D. Share all advice in verbal form only. The correct answer is C. Exercise care, diligence, and skill at all times. Explanation. The Code requires advisors to act with care, diligence, and skill, which includes making appropriate recommendations, understanding client needs, and ensuring ongoing competence. Which of the following is a requirement under New Zealand's Anti-Money Laundering and Countering Financing of Terrorism Act? A. Only report transactions over $1 million. B. Collect and verify customer identity information. C. Conduct internal ethics reviews. D. Submit quarterly product performance reports. The correct answer is B. Collect and verify customer identity information. Explanation. Under the Act, customer due diligence (CDD) is mandatory. Brokers must verify the identity of clients to prevent misuse of financial systems for criminal activities. What is a key requirement of record keeping in professional broking services? A. Retain client communications only if disputes arise. B. Store paper records only. Digital files are not accepted. C. Maintain accurate records that are retrievable and audit-ready. D. Submit all records to clients monthly. The correct answer is C. Maintain accurate records that are retrievable and audit-ready. Explanation. Regulatory requirements mandate that brokers maintain clear, accessible, and accurate documentation of advice, placement, and communications. This ensures accountability and compliance during audits. Why must brokers ensure confidentiality and secure storage of client data? A. To reduce administrative burden. B. To prevent client dissatisfaction. C. To comply with the Privacy Act 2020 and build trust. D. Because insurers require it. The correct answer is C, to comply with the Privacy Act 2020 and build trust. Explanation. The Privacy Act 2020 requires that personal and health information be stored securely and accessed only when necessary. Confidentiality is also critical for building professional credibility and client trust. Which of the following represents a conflict of interest that must be disclosed to a client? A. Recommending the only available insurance product. B. Receiving a flat hourly fee for service. C. Being paid additional commission by the insurer. D. Explaining the pros and cons of all products. The correct answer is C. Being paid additional commission by the insurer. Explanation. Transparency is key to managing conflicts of interest. Disclosure of commission, brokerage fees, and any benefits received from insurers ensures that clients can make informed decisions. How should a broker manage dual agency situations ethically? A. Avoid giving advice altogether. B. Fully disclose their relationship with both parties and manage duties fairly. C. Prioritize the insurer's interest over the client's. D. Act only as an administrative intermediary. The correct answer is B. Fully disclose their relationship with both parties and manage duties fairly. Explanation. Dual agency, where a broker has relationships with both the insurer and client, requires full transparency. Acting impartially and in line with ethical obligations is essential to avoid bias or misconduct. Which of the following best demonstrates ethical decision-making in a complex insurance scenario? A. Recommending a higher commission product without explanation. B. Ignoring a client's questions to keep the meeting brief. C. Using decision-making framework to assess client impact. D. Delegating all decisions to junior staff. The correct answer is C. Using a decision-making framework to assess client impact. Explanation. Professional brokers apply ethical frameworks such as client-centered reasoning, fairness, and harm minimization when faced with complex issues. This ensures decisions are aligned with professional conduct. What is an example of acting with diligence and care in the context of professional conduct? A. Sending incomplete proposals to meet deadlines. B. Reviewing a client's needs before providing tailored advice. C. Recommending the same product to every client. D. Allowing staff to guess client details when filling forms. The correct answer is B. Reviewing a client's needs before providing tailored advice. Explanation. Diligence involves careful, thoughtful action that reflects professionalism. Tailoring advice based on the client's financial situation, needs, and goals is part of brokers' duty of care. Why is cybersecurity awareness critical in digital insurance broking? A. To improve software update efficiency. B. To enable cloud backup. C. To protect client data from unauthorized access and breaches. D. To reduce staff training costs. The correct answer is C. To protect client data from unauthorized access and breaches. Explanation. With increased reliance on ERM systems and insurer portals, cybersecurity awareness is vital. Brokers must understand risks like phishing, data breaches, and malware, and ensure digital practices are secure.